Good afternoon, traders, and welcome back once again to the Hot Stocks Outlook for June 16th, 2017. As always, I hope you're having a great week out there in the markets, and we certainly have a lot of great opportunities to go ahead and take a look at today. Going to start here in Abbott Labs, but we got financials, some tech stocks. We've seen a lot of weakness across the NASDAQ, and a couple more things. But, most importantly here, and really for any trader out there, is understanding, okay, what are the tools that I'm using? How does my process work so that you're very consistent in the market? So let's go ahead and start here at Abbott here. And I'm going to really dig into some of these charts and how we interpret these really predictive indicators generated via the software here. Now, in Abbott, we've gotten a crossover between these two values. You see with this blue and the black line there. Now, that blue line is generated via the artificial intelligence found within the software. So a lot of really technical details going on there. The neural networks looking at 25 to 30 other markets before it plots that value on the chart. Now, the black line is just a regular simple moving average. So that's always going to lag and really, really just average out and smooth out the data of what's already occurred in the market. So whenever we have these opportunities where that blue line crosses above, what it's telling us is the predicted moving average is above the actual moving average. So what we're saying is forward in time, expect these averages to start moving higher to move towards that predicted moving average. And how we really use that is very simple. We recognize that the trend is up. So as long as the blue remains above the black there, you know that the trend is up and that average is still predicted to be higher than just the lagging regular moving average. So very simple, helps you hone in on direction. Now down here you have a very accurate 48-hour indicator. So you've got your direction on the top, and this is a 2-day, very short-term indicator, really warning you of strength or weakness in the market over that subsequent 48 hours, the 48 hours that haven't occurred yet. So whenever you get all these things lined up at the same time, you want to go ahead and start buying the market. I mean, what's it saying is over the next 48 hours, expect strength, and the trend is up. So as a trend trader, you definitely want to ride those longer term trends, but know when that weakness may set in the market. So you'll see this a lot with some of these charts as we go through. You'll get these little dips in the neural index, but as long as that blue line remains above the black line, the trend is still up. So this has been a really great opportunity so far, about a 10% move or so, just under 10%. But let's go ahead and move forward and really dig into some more of the details of how you can use this for different trading styles here. Now, here's State Street. And one of the issues a lot of traders have is getting into markets and really not holding on during periods of choppiness or sideways volatility. Well, you've gotten your alert that says the trend on State Street's now up. That blue line's above the black line. You see your neural index confirming, that move to the upside. And as you start to move forward in time, you see this market really just hangs sideways, moves a little bit lower until we get that big move higher. But what's so great about the forecasting ability of the software here is I'm actually going to bring up the predicted high and low levels for each day. So you actually get a range for what should you expect in the market on a given day, and we can actually see how accurate those predictions are against the actual market data. So, what we see here is if we're going to look to start getting into the market from here on out, we're trying to buy at these intraday predicted low levels. And you see how good the software is at, the market dips below that level and we're closing above, closing above, closing above, but the trend is still up. So when you understand that those are great levels to go ahead and have a resting order, get your position filled down near 82, unless that blue line crosses below the black line, you're going to hold that position. And we've certainly got a really nice move higher in the market. But what you'll notice is how this neural index reacts here, where it's forewarning of this weakness over the next couple of days, but the trend still very much to the upside. And once all these indicators line up in agreement, you're really seeing that move. But you want to make sure that you're really on board, have that position in place so you can make money as the volatility comes into the market and things start moving higher. Let's go ahead and move forward to JASO here. So again, using the same approach and really just these three simple tools of trend direction, a 2-day strength or weakness in the market, and then our predicted high and low to give us guidance on where do we want to be a buyer or seller in the market. Well, we see JASO moves into a downtrend. We want to look to start selling the market from here and bring up those predicted high and low levels. So we have a good guide of where should we even be looking to take a particular position and really see how this works, where if you've got these orders resting up near about $7.20 a share, you're getting filled, up near that high, but the very next day, look what happens. You gap up a little bit, moving lower almost instantly, but you're never getting that crossover that says the trend has reversed. So as long as that trend remains to the downside, you're going to keep shorting the market at those predicted high levels. And you see how this works out. There's your initial entry there. Here's another entry on a move higher. Here's another entry here, another entry here, another entry here. And you know that your directional bias is to the short side of the market because the trend is very, very clear here with that blue line below the black line. A lot of separation saying short markets like this. If you've got a downtrending market and you're trading near that predicted high, sure, you may get that short-term strength and some volatility, but use those levels from the software. And you see about 5, day trades making money to the downside. Over the course of this whole trade so far, we've seen the market move down about 14%. But obviously a lot of money to be made in the short term, taking pieces out of that market and, at a certain point, just locking in your stops, trailing that market and riding this trend lower as it keeps trending down. CenturyLink here. So let's go ahead and move on forward. And same approach, same methodology here of understanding that, look, the trend's reversed, blue line over the black line. And you certainly get a lot of sideways action in this market. And that's certainly the thing that trips up a lot of traders as far as sticking with the position so that you can be around for, this really great rally that we ended up having in the market. Well, again, let's bring up those predicted highs and lows and see, okay, well, if we're going to start buying the market from here, where do we want to be a buyer? Well, really great entry to the predicted low of that day, predicted low hit here, predicted low hit there. And those are great entries, really averaging around 2460, 2470 as this market moves up and is now at 2720. So, if you have those tools to, adjust your position, take those short-term profits, but also make sure that you stay in the market for the trend. And you see we've caught an 11% move higher over the past 20 trading days, about $2.70 a share on a very cheap stock here, trading at only the low 20s before the start of this move higher. So you see just how excellent these entries are, not only for your short-term intraday, but for those long-term additions and to really help you manage the trade as it moves forward and as these trends really progress in the marketplace. Last opportunity here at level 3 communications. And we've really saw a lot of markets move sideways for a while before they, eventually, exploded higher as far as the S&P and some of the indexes. But look what's going on in some of these markets where, you'd gotten your crossover to the upside, your neural index is up. So, directional bias, we want to be long, but you don't want to get distracted during this portion of the market where that market's just running completely sideways. You see the blue line is saying, look, the trend still remains up, but expect that weakness over just those 48-hour periods, just those couple of 2 days, and you can be looked to buying at better prices at those predicted low levels coming through the software. And you see where these come through. Predicted low hit here, predicted low hit here. And you never get that signal that says, go ahead and get out of the position. So if over the short term, you've got good, intraday levels, and you've got that long-term condition of the trend on your side, you've really got a lot, in your favor to make sure that you're consistently taking good and appropriate positions based on the volatility and obviously the direction of the market. So once again, guys, this has been the Hot Stocks Outlook for June 16th, 2017. Best of luck to you all out there in the markets. Thanks again for watching, and bye for now.